Hello, Warriors. Everyone doing okay? Let's have a great week. Yes, Amir. Amira, I got your chart on the lira, Turkish lira. Thank you very much. I believe I responded. Appreciate you sharing your views with me. Hugo Shahab, you don't see my screen? How about now? Okay. All right. Who wants to have a good week? Then don't trade. Everyone want to have a good week? Stay flat. Anyway, okay, so there's some risk off going on here. Good morning, Monica, Arena, Shahab. I tell you, to catch a top like this, DJ, how are you? I don't know. You need the patience of a saint. I guess you just sell rips. See how we got to this trend line? Blake showed it in the week ahead video. So same lines, and no fiscal stimulus deal. We'll see what happens. Okay, Mark, welcome to our community. I want to tip my hat to Grego Horvat on his call in crude. Helped me. Did it help you guys? So I was selling it last week here, and then these rips up here at 40.60. And this is a pretty important area, this 39 area. So it measures down to about 36. Here's a bigger picture. Oh, guess I can't do it. But here, I'll do it this way. That actually measures all the way down to 33. But as you can see, 36, once we start closing back under 39, which could happen today, just this move from here, 39, 42. So if you could add and subtract, you just subtract $3 from this breakdown, will get you to 36, which is this low. Nice call, wizard. Looking at the dollar, I still think there's a shot for a new low. Bought it last week and pitched it, and I'm flat. And I'm looking at still this low that perhaps we could get one more break. The 4-hour is now coming in not that far away from the low. The move down at 92.20-ish. So that's still 70 pips away. What is interesting today, I tell you, it's really pretty vicious. I thought we had a breakout in Euro Pound, then we had this failure, and then it looked like, this was just a false breakdown, and now we're pulling back. I'm going to wait for 132 in the pound. Okay, so this is a trade I'm going to be patient and wait for. If it doesn't happen, you know what, I'll miss it. But you see this, it bothers me. Even though it was right at the 61.8, that's what I'm saying. Sometimes it's not just the price, even though it worked, selling this confirmed high. But I have to stay with my discipline. I'd love to see one more push to new highs and cable stay under the 70 reading level. I'm more bearish cable than I am euro, although euro's leading the way down here. Would love to see that happen. And I think Greg talked about maybe 89.5 on Euro Pound if that happens. So I'm going to be looking at Euro Pound. Should cable get up towards that 132 level again. I know a lot of people are bearish yen, and this is an important area here in US dollar yen because you see this low, okay, which was not a reversal candle, but we got a rally to new recovery highs, and so far we're failing against it. I can't get bearish the yen because remember I said even if the dollar fails, I don't think we'll take out the 94 level, which was down here. and so far it's held 78.6. This too, should the dollar index break to one more new low, I'm going to be interested in where US dollar yen is, because, you know, I've been talking about this for quite some time, and yields are pulling back a little today. But, I think that, we've just begun something here in yields. So we had this little pullback here, and right now on the daily, the only thing stopping it is a 200 day, okay? And look at how the 50 held it. So I think we're going at least to one, and I think substantially higher. I think this is going to be the surprise. So maybe we get a few day pullback with risk off coming. One thing I wanted to point out to, tweeted this to crypto people. We had that great news about PayPal. Be careful up here, because here's one and here's two. And one more high, you could end up with a 3 drive to a top. And when I asked Peter about Bitcoin last week, I think he said maybe 13,514, and then he's looking for a pullback all the way to 9,000. So that probably happens during some risk off too, or a dollar rally. Bitcoin's really trading inverse of the dollar. So interesting correlation has appeared. So we'll see what happens here. I'd be careful up there, and maybe there's one more pullback, one more bus stop to get on Bitcoin from under 10,000. Okay. Anything else I really want to cover? I think you could say that the gold silver ratio has turned. Look at silver. I'm almost surprised gold is higher. A guy I follow says that commercials are more short now than they were back in September. So here's September. Oh, and we had this big break here. So they're more short now than they were here. So, and silver, much more susceptible to risk off. Look at that. Looks pretty ugly. I thought I was going to have a chance to sell it up here at, 26. It looks like it's starting to roll over, but check this out. Gold silver ratio is putting in a good day. I think we're turning the corner. Just like I said, I thought this was a pullback and that we could have at least a 38% retrace, which is going to favor silver. Silver's going to be your preferred short when this is happening, and gold your preferred long. Okay, so I don't know what I did with it. Here's chat. Commercials. Okay, so that's what I have this morning. We have Grayson Rhodes with us for a guest. We have guests every day. And we have a few new people that haven't been to FACE. And then we're going to have Mark Newton on Friday to make up for his interview being cut off a couple weeks ago. And while he was talking, he said there was some, potentially negative things setting up in the next couple of weeks. So it'll be good to hear what Mark has to say. And look at this. This is the last one. So, when you finally give up on it, it looks like VIX is poised to come out of here today. Nice little gap. So they've turned it back. Look how many times they've turned it back from 30, 29, 1, 2, 3, 4, 5, 6, 7, 8. We start closing over this. You're going to have some more intense volatility. So VIX on the verge of breaking out. And with that being said, Blake, I watched your week ahead stuff. I found it interesting that Trump election victory you would construe as bearish, where I think most of the street and that's what's great about you is, you know, you're always looking at the flip side of the coin. Most of the street would consider that bullish event, considering what the market has done during his first 4-year term. So I don't know,
Yeah.
maybe you want to explain it to you know, our attendees today, because I don't think most people are thinking that way.
Yeah. I mean, you know,
Open their minds,
Trump,
man.
huh?
Open their minds, man.
Well, first of all, good morning. Happy
Good morning,
Monday.
bro. Good
It's
morning.
it's actually pretty sloppy. Not like a lot of volatility this morning in the market. So kind of quiet.
Doesn't it feel like, you know, we're not gonna, I mean, who's gonna make major commitments ahead of a week from tomorrow?
Yeah, I mean it. You know, I thought if we were going to see any type of volatility ahead of the election, it would have happened already. But yeah, I mean, you never know. I mean, there
Yeah,
might be
you
some
don't.
position squaring here, but yeah. So talking a little bit about the whole, you know, presidency. You know, the market. It's more than just the president.
Yeah, it's a
In
Senate,
this
right,
case,
bro?
yeah, in this case, it's going to be the Senate and the president. So, I mean, we've got a situation where if you know, we get this quote unquote blue wave where you get Joe Biden wins, and then you get a, you know, the Senate, you know, controlled by the Democrats as well. Dude, the spending is going to be out of control, and the market. That's what the market's been pricing in. The market's been pricing in a blue wave. You
Yeah.
know, this you know, massive amount of stimulus spending, and you know, just you know, a ton of you know, just yeah, I mean, it's gonna just continue to really grow this US economy, and also the global economy too. It'll just, you know, all that spending, you know, makes its way out into the wild. So and if Trump is elected, yeah, I mean, we're probably going to still get that Democratic Senate, and then you've got stumbling blocks on anything that Trump wants to do. He's going to have a hard time pushing it through. And then on top of that, can you imagine what his rhetoric is going to be towards the, you know, China and Europe? And remember, he hasn't even really started with Europe yet. So the second term is going to be towards Europe, in my opinion, like, you know, beating up on Europe. So, you know, I think a lot of people are now starting, at least the banks that I'm reading and the analysis I'm reading, they're, you know, quite worried that a Trump second term is going to be negative for risk.
You think it might be
So,
contentious?
oh, yes,
Second
maybe.
Trump
Yeah,
contentious? Hey, you
perhaps.
know, Blake, I see blue waves every time I drive to the beach here in San Diego. And I've seen a red wave, but that's red tide. Doesn't happen as often. Kind of
Yeah,
like,
well, you know, it's going to be a really interesting few weeks, and I, you know, for those of you that think that on election night we're going to know exactly what has happened, I doubt that to be the case. I really believe that we're going to be kind of trying to figure everything out on on election night, and then the next, you know, um, uh, couple weeks after that, and it could really be drug out, and I don't know how the markets are going to take it, frankly, and we just have to be on our toes. I don't know if it's I don't know if this is going to be the market where you just want to, you know, be really long or really short and just stick with it. I doubt that that's going to be the case. I think there's going to be a lot of volatility going into the next few weeks. So, you know, just stay nimble, you know, and know your levels. And that's what we're going to cover today, is kind of knowing where our levels are at in the markets, right?
yep.
Kind of what we do around here. So, you know, as far as the euro goes, I think the euro is developing just another consolidation pattern. And you can see it here. And by the way, the German IFO numbers overnight were not good. So, you know, that's one of the reasons why the euro came under pressure. You can see it; it slumped here, and that's, you know, the German numbers. Like I said, they were not good, but we're finding some support. So I think that intraday, I'm going to note here that 118.05 is good support, and I want you guys to just be aware of that number. But we're just going to go ahead and write down 117.85 here. Now remember, the reason why 117.85 was important back when we dropped down here, it's because that was a retest of this trend line, right, and the breakout point.
Yeah.
So that's why last week that was such important support down there.
Oh, that is cool. It broke out of a triangle, and now it's forming another triangle above the breakout.
Yeah, I mean, it's a problem when you're not getting huge amounts of volatility, is you get these little bursts and then consolidation. Yeah. So that means that resistance today is going to be probably pretty important if we make it up to 118.50 again. Now, I'm going to write down 118.60, but you gotta realize that it's just up in that area. Okay. Let's talk about the pound dollar. Okay, so here's the pound. So the pound, a little stronger today. The euro sterling dropped from like 91 pence down to like 90.50. So you'll see the drop here in the cables found some support down at 130, and I think 130 is going to be continued support today. So I don't think we should change our ideas of what's happening here. Just 130 being support and resistance. I could probably say it's going to be right where we're at, but let me delete that really quick. I think resistance is going to be back up here at 131.50. Remember, this is the 618. This is also previous spike highs from over here. It's been support and resistance all through here. I'm going to delete that really quick because we really don't need it at this moment. I'll write down I'll write down the 618 because that's a spike high. I wouldn't be surprised if we did something like this the next couple of days. Just as the euro is consolidating, I think that the cable might do something very similar. 131.75 or 70. By the way, this is like we're finally. I don't know about you, Dale, but let me look at something today. Today's highs in Arizona will be 71 where I'm at.
Congratulations.
What's that?
Congratulations. I know, but when I lived there, it usually didn't break until the Halloween. You'd get a cold storm, and that would be it. So you made it through another summer in Death Valley, man.
Man, it's serious. It's crazy. But I don't know why I was saying that. I don't even know why I went there. But anyway,
you're happy.
I guess I'm happy. Oh, we have a time change, and just so you guys know, and that we always have poor Europe for about 2 weeks because we do a time change. We have a lot of people that missed today's webinar, and they missed this entire week because it changes up for our European friends. But I thought time change was going to be in 2 weeks here in the United States because it's always been 2 weeks after Europe does the time change. But now it's next week. It's next Sunday.
Okay.
Isn't that weird?
And you'll be happy about that too.
Oh, I'm super happy about that. I mean, I
so
know
you got good weather, an extra hour of sleep. What else could a guy ask for?
Yeah. So the time change, just so you guys know, in Europe, we'll be back to the normal time for the webinar. It'll be next week. So it's on Sunday, which usually it's 2 weeks, which I'm happy about. So I don't know why. I have no idea.
Oh yeah, right.
Who the
That
hell
extra
knows? I mean,
hour
so-
makes a
oh,
difference.
and I was reading this, and correct me if I'm wrong. If you live in Europe, this year is the last year that you guys are doing daylight
I was
saving.
going to say that, yes, they say it's the last time we change the clocks, and actually people say it's probably because the way 2020 is going, if there's going to be like an asteroid that, destroys the Earth or something. But yeah, it is the last time, yeah.
So they're like, screw it. No, but seriously, like I know the EU voted on it, and you guys are picking which time zone you're going to
I think it's
stay on.
ridiculous too. I don't even know why. I think it was put into action when when it was more of a rural society, and people were working on farms.
It's farming.
Isn't that true? Yeah.
Yeah. I think it's crazy. Yeah.
I'm a farmer, Blake. Did you know that?
You're a pip farmer?
No, I'm up before sunrise, asleep after sundown, except that I nurture seeds of greed for the harvest of pips.
Oh, okay. I don't see you doing much manual labor though there, Dale. Sorry. I don't do it either. So
I have tenant farmers.
Anyway,
you're right, man.
All right. Well, let's continue on analysis. But yeah, it's crazy that this is the last year of time change for daylight savings time for Europe. I wish we'd follow suit. It'd be nice, actually.
Yeah.
So anyway, and I would hope we permanently are not on your time, Dale.
Yeah.
So anyway, but it's kind of cool. We don't, where I live, I've never done daylight savings. Well, not in Arizona. So it's one of the very few.
It's too
places.
complicated for people
It
that
is.
live there.
It's way above our pay grades. So as far as the Aussie goes, there's a little downtrend line here, but the 618 is going to be important, which comes in at 71.60. I think I just wrote that down. I was just kind of doing it as we were talking. Support for the Aussie. I mean, intraday. I mean, I'm going to say if we could break this 70-80 level, then we might actually test 70-20 again. So I'll write down 70-80 because I do think that that's important. So I'm going to write down 70-20. It's actually 70-30. 70-80. Okay. Those are your supports. And I forgot I need to put the euro back as bullish because it broke that triangle, but since we're in another triangle, I think I'm just going to keep it in range. And I hate to do that to you guys. I know it sucks. I know it just sucks that we're in ranges like this, but I mean, it's just kind of the market right now. As we are trying to figure out where the next big move is. Unfortunately, everything is just range bound. So as far as the Kiwi goes, same thing. If you don't remember this analysis from last week, I actually think we're doing this, meaning the head and shoulder pattern, I think, has a little bit of room to run to this, 67.20 level, which would be the 127% extension of this movement, right? And also could make it all the way up to the 78% retracement of this move as well. But you notice the previous horizontal resistance for the other shoulder comes in right at the 127% extension. So that comes in at 67.20. And support right now is at 66.55. Okay. Dollar Canadian. So the dollar Canadian has rallied past these trend lines here, We're stopped up at the 618 retracement. That comes in at 131.90. That's important to know because that's right where we're at. So you can see it's struggling here at the 618. Now we have to imagine if we can get above this resistance here, 132.03, then we'll be able to make it back up into this resistance zone, which is anywhere between 132.50, 40 to 132.50. I'm going to mark up for today. I'm going to mark up the 132.20, then 132.50 level. Support would be any dip back down towards probably right here, which would be, well, it's 131.60, but I actually think it could go a little further. Probably 131.50. I just think dips are very well supported in the Canadian here. So 131.50. Dollar Mexican peso. We have a double bottom that's trying to form. Okay. And that comes in right now at 2083 or 2084. Right there. I guess that is, it doesn't really matter, right? It's down there. Okay. Resistance here is going to be this spike high that comes in at 22. And I know we've been writing down 22.25, and actually it's probably the better place, the better level to write down actually. So I know we have the spike high here, but really we should, write down 21.25. But I'm going to say that the dollar Mexican peso is really trying to form a double bottom here. So that means to me today, in the event the dollar Mexican peso comes back down into the 90s, I'm probably going to try to pick some up because I think the risk reward to being long here, I mean, if you think about it, like think about this, if we're range bound here, and this is going to give you some protection on risk off, just in case we get some risk off, right? Like if we're in this range, this is support roughly. Let's just call it 2080. Okay. So here's your stop. And let's say you're targeting 2150. I mean, if you think about where the current price is, I mean, your risk one to make 3 or 4. If it can dip a little further into the 90s, what's your risk? I mean, your risk is basically, probably 1 to 10.
Yeah.
So why not? That's the way I look at it.
Yeah.
So
at least back to those moving averages that red moving average and a red horizontal line looks like confluence. See that?
Right.
Yeah.
Right. So, I think your risk reward being long down here, it's good. And it gives you a little bit of a hedge against some risk off. Do you think there might be some risk off between now and, the next couple of days, going into this election? Yeah, could be. So, if you want a little hedge, this might be it, or a good opportunity. Dollar Swiss. So the 88% retracement's holding here. Resistance is right here. I'm intraday. Okay, so resistance is going to be 91 cents. Support is going to be 90.30. You guys know I have no desire to trade this right now. That'll change. That's not always my attitude against the Swissy. It is right now, though. US dollar, Norwegian krona. Same thing that we talked about last week. Resistance 940, support right here at 9. I think we wrote down 920 or 918. Actually, I'll figure that out. Hold on. Arguments. Hold on. This is from, oh, I haven't saved a bias chart in a while. That's because Stelios keeps saving them. And so, and he puts them in the chat rooms. And so I haven't been saving them like he has, because I can go back and reference. Like if you're in the chat room here, you can go back to your files, right? And then you can go back to the bias chart. This is Paulie's bias chart, but you can go back to the bias chart from, you know, last week. Which this would be it. So this is why I don't save it, because if I need it, I come back here. So there's, you know, this is the chart. So okay, so since we're here in our chat room, last week, or what were we saying here? This support, $91.10 and 90 cents. So we got 90.30 and 91 cents. So it's just tightening up now. It's all that's doing is starting to tighten up. Let's go in the dollar yen, or make our way down. Oh, I'm sorry. It was we were looking at US dollar Norwegian krona. 912, 917, and 940. So today I'm probably going to go back to that 917, 918 level, because it's holding so well. Then you got 912 below here. I don't think we need to go even that far down. Because everything is just tightening range-wise. I'll come back to the S&P and the dollar. Well, we'll go with the dollar index. So here's the dollar index. Resistance, right back up into the resistance zone. This is what we marked up last week, 93.10. And then obviously the multi-year trend line down here at 92.40. Okay, dollar yen. We're back up at that 105 level resistance. And today's high was 104.97. So if we can squeeze past 105, we might make it up to like 105.30, 105.40 today, maybe all the way back up to 105.70 as this triangle continues to tighten. I don't have any dollar yen exposure right now. Last week I was selling it as we were approaching 105, but I haven't done that here, and I'm not going to do that right now. Okay. So let's write down 105, and then I think we'll just write down.
Remember that movie? And then
what was that stupid movie?
Dude, where's my car?
Dude, where's my car? That's the only movie I've ever actually walked out of the movie theater. And it wasn't by my choice. It was whoever I was with. It's like, dude, this is so stupid. You want to go? I'm like, yeah, we can go. I watched it later, and I did. I watched it, when it came out on DVD or whatever, and I still think it's stupid, but that part was pretty funny. Okay, anyway, and all right, so support is down here. I mean, we still have to mark up 104.35, unfortunately. All right, let me just quickly do gold and silver and S&P, because everything's pretty much the same. So let's go to the SPOOs. Where's that at? There it is. So here we go. Right back down to support, which is 3,400. I know it's 3,410, but really it's 3,400. And this trend line and down sloping resistance now is 3,470. So it's come down 10 pips because it's a descending trend line. So 3,470 and 3,400. and we're in a range. And gold, let's get to gold really quick. Gold, just when you think it's going to break out of this little channel, it doesn't. So it's support. I think we wrote down last week was 1890. Well, guess what? It's still 1890, 1890 and 1935. So, here, wait, 1935. So this is this is bias chart from last week on Friday. We had 1895 and 1930. So as you can see, the gold range has expanded just a little bit because now we're taking in for the spike lows down here. And I mean, I could have wrote down 1930, but 1935, 1933, just extending it out just a little bit. Anyway, so here's your bias chart. It's finished for today. And I'm going to welcome Stelios and Steve. Hey, guys.
And then after the bias chart, what? Good morning. Good morning.
Yeah. Hey, good morning. It is bonkers, crazy volatility out there today, right? I'm joking.
Yeah,
Is it crazy?
I'm about to fall off my chair.
Yeah, it's pretty slow. Pretty slow. We have an election next week, and I'm a little, Steve, I got to tell you, I'm a little bummed out right now.
Why is that?
Waiting to hear why.
Halloween is next weekend, and last year, Steve and his family were planning on flying from Greece to come to Arizona to celebrate to be here for the Halloween festivities. And obviously, because of COVID, we had to toss those plans. And I'm a little bummed out because this is the first time in years that the Halloween celebrations fall on Saturday, which will be this next Saturday.
Yeah.
And we were gonna have Steve and his family come experience Halloween, since in Greece you guys don't celebrate Halloween, do you?
Yeah.
I have a question. Why didn't you invite me?
Yeah, see,
You're bald.
he's sappy. You hurt his feelings.
Yeah.
I would drive over, just to see Steve's costume. I know he's dressing up as a Greek economist.
Well, Stelios, you're
Right,
always invited to come, but unfortunately, housing families in my house is just not quite feasible. But yeah, Steve, he called it first. So
True.
anyway,
That's
I'm a little
So,
bummed out because
with how things are going, I'm assuming that at some point when Jason is in university, we will be able to come.
Anyway,
Next year.
guys, I wish I could, fill this conversation full of good ideas, but right now, it's quite range bound. I do think that, and I kind of made a point of it a little earlier. I do like this dollar Mexican peso. I know it's up 1% today. You don't want to chase things necessarily when they're up 1%, but that doesn't mean that it can't be up 2% today, and that also doesn't mean that it won't go straight higher from current levels. But I think from a risk reward perspective, I think having a hedge out there, a way to protect yourself against some downside in equities if things get a little volatile. I don't think the dollar Mexican peso is a bad idea, especially from a risk reward perspective. But I wish I had some better ideas out there today. But you know what? It's early in the day, and by the daily roundup, if you're a ForexAnalytix subscriber, in about 4 hours from now, I might have a better idea of things that are happening. So
Whenever you run out of good ideas, just say buy the USD Turkish lira. You can never go wrong with that.
yeah, I wish I could. I actually really wish that, but it continues to break into new all-time lows.
Yeah, above 8. It's above 8 now, and we have a huge cup and handle formation. that
Yeah.
points to like 920, and I really believe that we can actually do one 920.
Oh yeah. I don't see why not. I mean, it looks like it's going. So anyway, all right. Well, I'll let you guys take over. I hope you had a great weekend. Thanks everybody for tuning in. Here's your bias chart. One last look, and then I'll let Steve and Stelios and Dale take over from here. So see you guys later.
All right.
Thank
Good
you
luck
very
to
much,
this
Blake.
break.
Guys.
Thank
Bye bye,
you.
mate.
Hey
Hello,
guys,
everybody. How are you doing, Coach?
How you
doing all
doing?
right? How you doing?
How you doing?
Oh, now I know what Halloween costume you're going to wear. You're going to pretend you're from New Jersey. Like
No,
Joe.
I let Joe do that.
All right. He does. He pretends.
Yeah, he pretends he's from New Jersey.
Yeah.
Right. Well, we have nothing new today or over the weekend. We're 8 days away from elections. It really doesn't look like there's going to be a breakthrough in terms of the stimulus package, and both sides are blaming each other and the usual stuff. So
Irrespective, Stelios, Trump managed to get to the elections in a year that it's totally unprecedented on all levels, with the stock market being extremely close to all-time highs. That's some kind of an accomplishment.
yeah,
Yeah.
well, they've tried hard, haven't they?
Oh yeah.
But at the end of the day, we're so close to the elections now that, and the markets actually don't seem to care if there is a deal before the elections, because let's face it, it's going to be the same thing, even if there's one a week, 2 weeks later. But we've come to this point where polls are still showing Biden being in the lead, but I don't trust polls, and I don't think anybody does anymore. So I think it's going to be a close call. And the big question is, what's the bullish scenario for stocks? What's the bearish scenario for stocks? I don't know. I really don't know. I've tried hard. Blake has his opinion. I think he may be right, but I really don't know. So
to be honest, Stelio, I think the overall blank mistrust in polls is wrong. Even in the previous election, and we should leave aside the betting markets that had Hillary 90% or whatever, because that's also sentiment. But even in the previous election, if you consider it, Trump did lose comfortably the popular vote, and a lot of the swing states he won, it was like marginal wins. So, if you really examine it closely, it wasn't like so much of a disaster. Yeah, the end result was different. There's no question about it. But it's not like, he won by landslide or whatever, having to do with...
No, but the polls were not showing 50-50. They were showing like huge percentage.
No, absolutely.
When the polls have Hillary at 90% to win and she loses, I think the polls were wrong.
I also have to say, though, it does hurt my feelings that you don't trust polls, because I'm half Polish. All right, so you don't trust half of me. That's like all of me. Anyway, go ahead.
Yeah.
I trust polls.
Half Polish? How many generations back, Dale?
3.
Okay, yeah. So you're like
2.
And I don't trust anybody named Paul either. So, all jokes aside, we're a week away, and really, I don't think anybody can really say yes, Biden's going to win or Trump's going to win. So, what are equity markets and risk in general, what they're going to be doing? They're going to be chopping. Obviously, we're going to have a plus or minus 1% day like we're having today, but I don't think we're going to see something material before the elections. Obviously, I could be wrong, but I think we're just going to be going sideways until then. After that,
personally, still
it'll be in the courts for a month still, I think.
Yeah.
Personally, as an observer, I speak with a lot of people, due to the job we do as well. I've heard many people that did vote for Trump and they're not going to vote for him again. I haven't heard of the opposite. I have only one example. So I think that there is a decent chance that there's going to be a surprise in Biden winning comfortably.
Yeah, could be. Could be.
That's what my intuition tells me. Now, it's a different story if that's going to be good or bad. It's not an easy thing to analyze. I mean, everything has like its positive and its negative sides. Purely focusing on monetary policy, I think we can more or less agree that if there is a blue wave, there's going to be a lot more stimulus coming.
I agree. Yeah, 100%.
With whatever that means. And that's what we care about here anyhow. I mean, what are the implications in fiscal and monetary policy, because those are the two elements that will actually affect the markets at the end of the day.
Yeah. Yes. Apart from that, a bit of the same elsewhere. We had no Brexit headlines, which is weird, but the pound has been relatively steady over the weekend. And remember on Friday, there was this comment from EU sources, the usual sources, that
sources
that they were trying,
unquote.
that there was going to be a compromise from the EU side regarding fishing, and apparently they've said in France, I think they told the fishing, I don't know how you call them, that they should expect to have less output, let's say, from next year onwards, which means that there's going to be less fishing in the UK waters. I don't know if that's right or wrong, true or false, but if that area is something where there is a compromise, then I think we can all safely say that there will be some kind of an agreement between the two sides. But we haven't got anything firm yet. So
let's just tell you, the cable has been rebounding in so far what seems like a corrective type of formation. But it's a binary thing, as we've said many times. I mean, you get some type of a deal, it should fly. You get a disappointment, and this thing should dump and tank very, very badly. I mean, I assume we can see like a 200-300 pip move easily, very easily. So until then, I think it's more of betting than trading.
True.
Yeah.
And the other thing again, regarding COVID, there's more records of daily cases. We have to note that the mortality rate is a lot lower than the first wave. That's probably because there's a lot more people who are getting tested who didn't have symptoms. Remember, back in March, people got tested because, I'm not feeling very well, and
a lot more experience, to be honest,
exactly.
in treating people early, so on and so forth.
Exactly.
So it's a combination of the two.
So we have more cases everywhere, records, but we're seeing this in Greece as well. Daily cases almost up to 1,000. We were like 100, 200 back in March, and the mortality rate is still relatively low. So at least that's some good news.
Yeah,
it's not even November.
Yeah, that's what I wanted to say. The problem being that for people, for example, that don't know Greece, the weather here is still like more or less like it's spring. So imagine, when people
have to be inside, and
when people start getting colds and they start sneezing all over the place and coughing, etc. Imagine how much this should multiply infections. Anyhow.
Well, the analog from 1917, 1918 on the second wave, which is what Europe's experienced, we never finish our first. We have like a 3 drive formation setting up. But no, really, look at it. You got 2 highs and a pullback, and now we're blowing off. I didn't put an RSI on it, but the magnitude of the second wave of the Spanish flu compared to the first wave was, 5 to 10 times the magnitude.
Yeah, keep in mind though, because we need to adjust for today's standards. Keep in mind that yes, there is a very good analog in that, and I do believe there is a big chance that we're following it. Although now compare the medical science 100 years ago with today, and
for treating.
Keep in mind that 100 years ago, the planet was in the First World War, with whatever that means.
Yeah.
So at least we have those things going for us. We don't have a world war, and medicine has evolved dramatically since then. So That's
Yeah, but
something.
you have 60% of Americans trust Dr. Fauci's advice, and 40% trust President Trump's advice here in America. So, 40% really, they're still out there not masking everything. So,
Yeah, actually, they've mandated here, which, to be honest, I consider, personally, I consider stupid if you ask me. They've now mandated
Masks.
wearing masks outside, which honestly I don't get. I mean, we had mandatory masks inside, which I consider, proper, absolutely proper. But now, walking the street with your wife, I mean, come on, you can be careful and not just be next to another person. You don't, but
Yeah,
whatever.
I know.
They see
I mean,
cases go up and they just, feel obligated to take more measures, even measures that, in my opinion, don't make much sense. In any case, back to the markets. The first thing I wanted to talk about before we go to, other asset classes is USDC and H. It's interesting how we found support at this confluence of supports down there. We've shown this chart before. We've shown this descending channel, and it's a nice confluence. We found support exactly at the 161.8% extension of this rebound higher, confluencing with this descending channel trend line support and this horizontal support area. And guess what? We're seeing quite a healthy reaction from there. Now, having said that, and now that this has happened, I'll say the same thing I said when we had this rebound over here. You can't really call this a reversal unless we actually break out from this channel, which also confluences with this low and these highs over there. So the level to watch is 675. So 675, key pivot area in this market. I think it will determine if we actually resume the downtrend or if we're seeing something different unfold here, perhaps, a much bigger rebound higher, and then we can, judge what type of rebound it is based on, momentum characteristics, so on and so forth. Now, people are already asking for the metals and natural gas, etc. I'll start by natural gas, saying that predictably, natural gas pulled back 2 days. Let me move this a little bit more to the right so you can see it. Okay, so natural gas pulled back 2 days, retested the 290 area, and look at the reaction today. We already have an outside white candle forming today, which is quite a nice bullish reversal candlestick. Reversal, anyhow, continuation in this case, because a 2-day pullback doesn't constitute a trend to reverse. So I think that natural gas looks just fine, and I see no reason why it shouldn't continue higher as we had assumed it would. Now, having to do with gold, I think that gold is doing what many markets are doing. It's waiting likely for an election result to then decide how much monetary stimulus it wants to price in. And here is silver. Admittedly, silver looks less bullish. It's currently testing the waters below this ascending channel. In any case, in both these metals, there is still a valid technical scenario that we might see one more low. In the case of gold, a move towards 1820. In the case of silver, a move towards 21 before we see a continuation higher. But in my mind, the chances that whatever of the two happens, we continue straight higher or we register one more low, the chances that the trend higher is over and done are extremely low. So I'm 100% bullish, and I expect to see more strength in the months and even years ahead. Okay, so keep that in mind. I mean, I'm not looking to sell any of these metals. I'm only looking to trade them in the long side. Now, copper, after producing another high, actually seems to be breaking down today. We might be seeing the beginning of some type of a deeper corrective move lower. Admittedly, copper has been a beast since it found the low more or less when you would have expected to find the low, when the extreme sell-off that we had at the beginning of the COVID crisis ended at some point mid-March or whatever. It has actually benefited from a huge rally since, and it makes sense to at some point, produce some type of a pullback. First area of support, I would expect it to be 285. Below that, somewhere 270. We take it one day at a time and we see. Platinum still consolidating. Palladium still consolidating. Still looks like they want to continue moving higher, especially platinum. I think there is going to be massive gains in platinum in the years ahead. Now,
copper and oil being weak, Steve, do you think that's kind of an economic signal we're getting here?
Yeah, having to do with crude oil, we had mentioned, and thank you for reminding me, we had mentioned multiple times that there are two scenarios here. One scenario that this is a channel, in which case we expect one more leg lower and then higher, right?
Yeah.
The second case scenario was that this was a triangle, in which case breaking above it would immediately produce one more high before seeing a deeper correction lower.
Well,
now,
when Greg has Skyped us in our company chat to look at oil, to me, there was only one scenario.
Yeah. Now, the thing is that both scenarios are still alive, meaning we haven't broken through this trend line support. Yeah, exactly. So theoretically speaking, we haven't invalidated one of the two possibilities. Both possibilities still remain valid, and technically, any of the two interpretations makes sense. Now, yeah, I would say I favored since the beginning one more leg lower as the main case scenario. But in any case, as I said before, and as I've said in the past about gold and silver, for me the trade was never selling crude here, was finding a level I consider good to buy it. So that that remains my focus here. My focus remains in hopefully seeing one more low in crude, and as deep as possible, even better. And me buying it again, because I do believe that anything with intrinsic value will end up having nice gains against the US dollar. So that's my angle, that's my point of view, and I've had no reason to change it. Speaking of the dollar index has found support in this support area, roughly at 92.40, whatever it is. Is this a bullish development? No. I mean, as long as we trade below 94, it's nothing to talk about. I mean, admittedly, we haven't really had a trend here since, what is it, like end July? Yeah, like the last week of July and onwards, the DXY has really doing more or less nothing. Having said that, and considering the prior move lower, I see no reason why I should be bullish. So, I maintain my bearish bias, and, it's as simple as that. Now, having to do with indices, I know that Blake covered the S&P, and if you look at the rest of the indices, don't really look different. The only difference here being the DAX. The DAX actually is breaking down today, quite a big move. Might want to fulfill this pennant target. What would that target be? Let's extend the first move lower to the low.
I guess there was some news out of Europe of some economic report that showed weakness. And one of our guests, Daniel Lacal from the summit, is saying it looks like we could have a double dip recession in Europe.
I think we can have a double. First of all, what does double dip recession mean? Did we actually finish a recession and nobody notified me? What do you mean?
Yeah,
have we actually had 2 consecutive quarters of growth so we can start worrying about a double dip recession?
Yeah, we just had a bounce off the basement
Yeah, we had a bounce of the basement, but where is the positive growth? I mean,
in China.
to be
China
in
is
a
the only country.
yeah. I really don't care about China's numbers. I mean, I don't care because I have no way to validate them. You know what I mean?
Yeah, I know.
China is at a big extent a black box. We know that. So bottom line, this is the definition. In order for you to be in an expansion, you need 2 consecutive quarters of growth. In order for you to be in a recession, you need 2 consecutive quarters of negative growth.
Right.
So
we
far,
haven't had either.
so far, we know we're in a recession because we've had 2 negative
Okay.
quarters in a row. So we know we're in a recession. This is undisputed. It's simple maths. But, how do we know we're out of the recession? So I'm not worried about a double dip recession because I'm not seeing the recession being over. Anyhow, do we have a guest, Dale?
Yes, we do.
Okay.
Grayson Rose. I'm going to do musical introductions of our
Perfect.
guests from now. You think we'll lose some attendees? Anyway, Grayson is stockcharts.com, which is a great site. Grayson, I'm going to promote you. Probably haven't had a promotion in a while.
Oh, back to that old joke, right?
Yeah. So you're now a panelist, and I'm going to ask you. Okay, silver heading lower. Okay, Grayson, welcome.
Hey guys, good to be
How
here.
are you, buddy?
I
Hey.
am good. Hey, I haven't had a promotion in a while, but I haven't had a musical introduction ever. So, thank you for
Sick.
that.
Wow.
There's a
Yeah,
first for
see?
everything.
All right. Well, we aim to please. So
There you go.
you remember how to
Good way
share
to
your
start the
screen?
week. I
Yeah.
do.
All right,
Let me
Grayson.
go ahead and grab it here.
I tell you what, I mean, your stockcharts.com, I remember using it for basically just charts many
Yeah.
years ago. And what an evolution you guys have gone through. I
We
mean,
have. We
yeah, it's
really
like
have.
you have the who's who of traders every week.
I know we got quite the crew now. I know you've had David Keller on the show a couple of times, and
Yeah.
he joined us about a year and a half ago now. And no, I mean the list continues to grow. We're doing lots of great things on the content side and lots of great things on the product side. We're having a blast. I mean that's the most important thing, right? I mean if you're not having fun, what are you doing?
Okay, and I want to ask you this because
Yeah.
to me, having guests like you and having a calendar and having interviewed 1,000
Sure.
traders,
Yeah.
it's very, it gives me an edge. There are certain people whose work I really respect, and it kind of
Mhm.
gives me, they see things I don't see. Do you do a lot of intelligence gathering with contributors on stockcharts.com?
What do you mean intelligence gathering?
Well, you read their stuff and you find ideas that you didn't have on your own.
Oh, yeah.
Yeah,
I'm a sad case. I mean, you should ask my fiance. We're getting married next year, and she doesn't know what she's getting into because I get off work and I still stick around on stock charts, reading everyone's blogs and watching all the videos and all that. I mean, we do really have an incredible collection of people, that have been doing this for forever. I mean, guys like John Murphy that are sort of a godfather of our industry.
Yes.
Sharing their thoughts on the market and trying to really teach people through their work. I think that's the thing that we try to highlight the most is getting people that can really kind of teach, not just get up there and blab for a while, but actually kind of teach people and try to empower, readers and viewers and users and all that stuff. So yeah, it's sad. I mean, I spend way too much time on the site, but I love it because, we got such great stuff on there and great people to learn from. And there's always something to learn. So that's a good way of putting it. Intelligence gathering, just
I'm
brain
a big
sharing.
believer in it. I'm a big believer in it. So Forex Gal says you have a nice radio voice. It's better than what I get. Dale, you have a perfect face for radio.
There you go.
And-
There you go. It's
and,
these microphones. They do amazing things these days, right? You know,
Yeah,
you
sure.
get a filter on there.
Yeah, sure. So we're looking at S&Ps. It's not showing today's action where we're lower.
Right.
This has been kind of a grinding, slow decline off here. What's your
Yeah.
take on this? I know under 3,400, it's going to look pretty vulnerable to me. What are you thinking here, Grayson?
Yeah, so I missed Blake's stuff earlier. I caught just the tail end of it, so I didn't get to hear what he was thinking about the S&P. But the line that I'm drawn across here, this is a 3-month, 60-minute chart, as you can see by the title.
Right.
The line that I just keep seeing us come back to is about 34.25 on the S&P 500. I mean, you've seen us just battle test this thing. We obviously kind of jumped up to it here back in August, bounced around that level a little bit, went through it finally, and came back to test it. You can kind of see that just a little bit there. We rocketed higher up to all-time highs over here in early September. But then once we lost it, we kept trying to test that 34.25 level and totally lost it in September when we had that pullback.
Right.
As we've made the run back up in October, we've come through that nicely, and we've come back to test it again now from the top. So I'm seeing this 34.25 level as an incredibly important one to watch. And I love the fact that we've come back, tested it after falling through it, and now we've bounced off a little bit. We'll see what happens this week, but that 34.25 level to me is absolutely crucial. But I mean, it really does sit kind of in a broader range that we're just bouncing sideways right now.
Yeah, when I look at your chart, and I didn't see this on mine because I'm, you're using a catch chart, but those two candles that got through it intraday, but did not close beneath it.
Yeah.
To me, almost implies there could be one more because I look for 3 dry formations, and seeing this chart and today's action, maybe that's going to happen before we get a better rally. But yeah, you've identified a very important pivot. What do you think going into the elections? Do you think it's prudent just to, sit on your hands and not try and predict a market reaction to something that we're not going to have an answer for? Definitely not on election eve. And the markets also seem to be kind of comatose today going into it, even though we're down, not much going on.
Right.
When I had David on, he was saying there were some groups that were starting to outperform the S&P, which were kind of defensive in nature, like utilities. And
there are.
Yeah.
Utilities especially. I mean, utilities actually is outperforming tech. I've got a chart over here. Let me pull it up. I'm scrolling around real quick, but I like to look at this. I like to look at this offense versus defense chart. And there's kind of a standard view that you can take where you do consumer discretionary versus consumer staple. Discretionary being more of an offensive sector, staples being more of a defensive sector. So if that ratio is going higher, it means that we're favoring offense. So when I see this blue line moving higher, that's kind of signaling that we're favoring offense overall in the market. This, though, is a cap weighted look at that ratio. So we can actually look at it in an equal weight ratio where we do the equal weight consumer discretionary versus equal weight consumer staples. And again, we see that going higher. So I love to see that. But like Dave was probably mentioning, utilities starting to outperform the S&P 500. And actually what's more concerning to me is utility starting to outperform technology. So that's what this green line is, technology versus utilities. And so when we see this, technology just clearly leading, that's great. I mean, it's a very offensive sector that's moving to the upside. When we see that break down, and so now utilities are actually starting to outperform technology, that concerns me a little bit. I mean, it might be just a bit of a rotation back to normal. I think we have run pretty high, and so maybe we're just rotating back to normal, kind of flattening out a little bit. But it's pretty aggressive the way that utilities have been outperforming actually in recent weeks.
Yeah, and we have our earnings report and some of the MAGA or FANGs this week.
Yeah, you picked a good week to have me on. What an exciting one.
Yeah, so big I have a hard time wanting to take a position into earnings reports. What's your discipline on earnings? If you own a position, you stay with it no matter.
Yeah,
Earnings or
so
not.
it all comes down to the charts for me. I mean, I've got a lot of positions that I'm sticking with because they're continuing to do well quarter after quarter. I am pretty heavily positioned in technology, and a lot of those names have continued to do well even through the chaos that we've seen this year. So for the stuff that I'm in, I'm watching the charts. They're continuing to trend higher. They're continuing to sit nicely at good levels, the stuff that I own. So I'm not getting out of anything that's working just because an earnings report is coming up. As far as new positions, though, there's a lot of stuff that's working right now. I'm still finding a lot of charts that are breaking out nicely, trending strongly. If I'm looking at something that's reporting earnings this week, I'm probably going to sit on my hands until after it. It's just a big major event that's got a lot of risk to it, a lot of unknowns around it, and so why not? Especially when you pair that with a major election coming up. I mean, those two things, for new positions, I'm kind of sitting on my hands a little bit. But it's definitely not getting me out.
What's your take on kind of a move towards cyclicals, industrials?
Yeah.
Kind of a rotation. I mean, there have been people talking about this great rotation that's had false starts many times. I think it's real this time.
I don't know. That's a good question. I have one of the charts actually that I've really been liking a lot lately. Gotta scroll through and find it here. Is industrials. I mean, look at the resilience of this move in industrials. Just a steady climber, and it's underperforming. So this chart's looking at industrials XLI versus the S&P 500 over the last year. So over the last year, they're underperforming the S&P 500. But when we look just sort of from middle of the year on, it's actually outperforming nicely in sort of a steady uptrend here of this ratio XLI versus the S&P. So trending back kind of up towards new highs. I actually really like the move in industrials. So you think of some of these sectors that are maybe feel a little bit overheated to some people, like technology, obviously, but even something like I had consumer discretionary up here earlier. Even something like XLY, which has been running higher. I think that industrials move might feel a little more comfortable to people, but it's still a strong trend outperforming the S&P. I mean, it's a beautiful chart right now. That
it looks like it has another high coming.
I think it does.
Chart.
Yeah, I absolutely think it does.
Last time you were on, I talked about my view on yields, and I was talking about, that I thought yields were going to head higher, and they've started to do that. I mean, they're stalling at the 10-year note, stalling at the 200-day moving average up here at 80.
Yep.
But we've had a decent move, and we break out. I think we're going to 1.25.
Yeah.
What sectors? You wouldn't think utilities would do well in a sector like that. What are the most vulnerable sectors? Would they be real estate related, REIT related? Say the 10-year yield goes up to 120 to 140. What do you think is going to be? It should be supportive for banks, right?
Yeah, should be.
I mean, I know what is, right? But the XLF has been doing okay while yields are climbing, and there's a little steepening going on.
Yeah.
What should people avoid if this interest rate scenario is, say, only halfway through what it's going to complete?
I think you hit it with real estate. I mean, that to me is the one to avoid. And it's not just the one to avoid right now because of yields. I think it's also obviously the one to avoid because the whole global real estate environment is just shaken. I mean, when we think about, residential and commercial real estate, no one really getting into new spaces. The only sector of sort of subsector of real estate that's really working right now is all the, the cloud stuff, the data center warehouse type of things that are flying up. But I mean, if there's one thing to avoid, I think right now with that environment, it's real estate. So I think you nailed it there, Dale. This is the yield chart that I'm watching. So it's an interesting one because you've got the 30, the 10, and the 2, and then the Fed funds rate as well. But you can see, kind of where we're sitting there. And the key to me on this is that the SPX yield is still higher than all of those, which is when we scroll back in time. I mean, this is a 20-year chart. That doesn't happen that often. It's still a remarkably unusual position to be in where S&P yields are higher than anything else. I mean, it's odd. So that this whole yield picture is just, it's out of whack to me. I mean, it's crazy. This is the chart that just really shows me, really kind of represents to me how crazy this interest rate environment that we're in is. How unprecedented it is.
Would a cross of those two imply something?
Yeah, that's what I'm
green
watching.
Crosses the blue. What would
Right.
that mean to you, Grayson?
It's a good question. What it means to me, I think it means that we're getting back to normal. Frankly, I'd really like to see that, just because, again, look what the green relative to the blue in sort of normal times. Look how far how far apart they are, and obviously, they've been trending towards each other for a long time, for 20 years. But I think what that signals is kind of a return to a slightly more balanced normal. As far as actions I would take around it, I'm not sure that alone really signals anything to me, but still I'm watching that, kind of hoping for it, actually, because it's just it's a strange environment that we're in right now. It's purely strange.
And any of the miners, because higher yields are not really friendly for commodities, because it would include some dollar strengthening, and it also brings in some competition, or what they call opportunity cost. There was no opportunity cost to own gold with yields at 50.
Right.
But if we go to 120, it could change the picture. What are you seeing in the miners?
I think it could be a headwind for them a bit. But the key to me with that whole thing is that, those rates are going to stay low for a while. I mean, even if they continue to move a bit higher, we're not going to see returns to these sorts of levels anytime soon. So
3%,
it could be, exactly. It could be a headwind. But when we think of sort of the broader picture and what normal used to be, we're still so far from that. So, maybe a bit of a headwind, but that's probably the most I'd say about it. I wouldn't worry too much. But
okay. Yeah. So, what kind of election outcome? I know, getting the crystal ball out. Do you think it's going to go to the Supreme Court?
That's a good question. I hope it doesn't, just I think for our collective sanity. But I mean, there's so much uncertainty that, that's another reason that I'm just kind of sitting on my hands, especially watching us. I'm going to go back to that S&P chart, and here's the daily. Seeing us just kind of range bound. It's a wide range, but seeing this kind of range bound drifting sideways for the last couple of months ahead of this election. We ran up to all-time highs. We kind of tried to test it and failed, but still we're moving sideways. Ultimately, we're moving sideways. And to me, what that signals is that a lot of people are just confused and they're waiting. We're just kind of waiting to see what happens. So when I think about positioning going into this, I'm still nibbling at a few things, individual stocks that are doing well, individual charts that are, moving nicely. But as far as kind of bigger positioning things, I think that waiting until after the election is perfectly fine, because we don't know. I'd love to sit here with my crystal ball and say, hey, I think I know what's going to happen, but no one does. At the end of the day, we don't. And I think a lot of people have, when I think about the election this coming year, I think a lot of people have sort of forgotten, maybe intentionally or unintentionally, forgotten how crazy 2016 was. And before that too, I mean, with Brexit and how that shocked everyone. I mean, shocks can happen. Uncertainty is real. You never know what's going to happen. People thought 2016 was so secure and so clear. And it surprised a lot of people. So, I think that has taught me a life lesson of, you never know what's going to happen. Even when you think you do, you never know. Yeah. So for a major event like this, I'd rather sit out and wait and see what happens, and then figure out how to move after.
Well, if you did that, you were smart in 2016. You could have bought the S&P limit down with Carl Icahn. Yeah. Do you like?
I know. That headline has just, it's always stuck with me. Him running. I think he left the party. Yeah, to go by. Oof. What a guy! What a move.
Yeah.
Yeah.
Do you like Grayson? Do you like cannabis?
That's been so I'm in Seattle, so I maybe have an interesting take on it, because we were, Washington was up there with Colorado. We were, the second state to legalize cannabis. So it's been interesting to watch it here in the city for, I guess it's been, what has it been, 6 years now, something like that. That's just flown by. But you know, it hasn't taken off the way that I always thought it would in Seattle. I mean, yeah, we've got some big pot shops and things like that around, and it is an industry. You know, it's creating jobs, and people are going and buying and stuff like that. But I haven't seen that industry take off the way that I thought it would. From a sort of a business
you're not
perspective,
shopping enough.
I'm not shopping enough, I guess.
Yeah.
But
But
you know,
anyway,
that's the key. No one is. I don't see
Really?
the people. I don't see the people shopping as much here. I mean, maybe it's they're just keeping to themselves. But from the business perspective, that's kind of one thing. But from the social perspective too, you know, I don't hear people here in Seattle really talking about it, really making a big deal about it. And so I have not leaned into that industry as far as the markets go. Because I haven't seen the real interest from it here in Seattle, where you think that there would be such a huge interest in it.
Okay, and oil, Grayson, oil's been under pressure. I mean, every once in a while you get a heartbeat out of it, but
every once in a while,
yeah, it's still in a void for you.
It's still in a void. I mean, I want to put up two charts on that. So here, one is my sort of classic intermarket look, right? We've got a bunch of stuff. We've got gold and stocks and bonds and all that. I mean, here's oil, just a total tanker, pun intended, I guess there. So, I mean, when I look at this chart, there's one clear thing to avoid, and it's down here in the bottom of the chart of the black line. But the other thing that I come back to is if I flip over to my sector charts, I mean, why own this? I've said this to a couple of people, you know, energy is just going down. It's trending lower. It's kind of everything that me as a technician, it's everything that I try to avoid. You know, a clear downtrend with falling moving averages and just not finding any life, underperforming sort of chronically. So, you know, I would love to see XLE moving higher. I'd love to see the energy industry as a whole moving higher and oil specifically, but I'm not seeing it. And until
they're
I
afraid
see
of the election too. Election results. Yeah, they are. That could be right. They're pretty panicked. I mean, Biden mentioned one thing industry about during the debate, and I don't blame people in that industry because it's their living. So
that's an interesting point. You know,
go ahead.
So when we talk about, you know, earlier we're talking about yields and the effect that's going to have on some of these sectors, some of these industries. You know, I think that the policies that may or may not come out of the election, but you know, if there is a Biden victory, the policies that are probably going to come there are just going to be even more of a headwind for energy. So if I'm looking at, you know, the impact of rates going up on real estate versus policies at the federal level on XLE and the oil and gas industry, you know, I think that's going to be a much stronger story.
Yeah. Okay. Yeah. You know, I had an interesting take from a guy I interviewed, and the reason he's looking eventually for triple digit oil is that would be the catalyst for really making green look great, because right now it's kind of break even with cheap, you know, fossil fuels. And if we went up to, you know, $90 crude, and people are paying $6 again for a gallon of gas, everyone would want to go green. So I mean, as long as there's no big price advantage, it's more of a political statement than an economic one.
Totally. I mean, I've never really thought of it that way, but if you're long Tesla, you should be really hoping that oil prices go up.
Yeah.
I mean, that's totally going to drive people to electric cars and embracing solar and all that stuff. I mean, you're right. That's, I think the biggest, I keep using this word headwind, the biggest headwind, I think, for the whole green industry is that oil's so beaten down. It's so cheap. It's so accessible. You know, I think that's a great point.
I know why people, we have a smart group of attendees here, and DJ's saying, and it's probably one of the reasons people keep trying it, the XLE is throwing off a 13% dividend yield at the moment. And I just have to say to him, what I learned about yields early in my career is the higher the yield, higher the risk,
Yeah.
right? So,
Yeah.
you know what, this would be a good time to show how people could subscribe and get your weekly email
Yeah.
for stockcharts.com so they
Sure.
could follow some of these legends that you have on there, like Martin Pring. I mean, these are,
Exactly.
you have guys from my generation.
Yeah, no, absolutely. I mean, we really do have an incredible list of people coming across the site. So a couple things to point out. One, stockcharts.com has always had free tools. We will always have free tools. So if you're interested in charting, you can always come to the site and just come up here, type in a ticker symbol, and get going. You don't really have to sign up for anything. That said, our most powerful tools and features, all that stuff is behind the paywall. We reserve that for our members. If you want to save, charts and lists and do all the things that really make stock charts fly, we do have a free 1-month trial. We'd love to have you join us. You can take that. You can see what we're all about. We've got lots of help docs and things to get you started. And like Dale mentioned too, we've got a ton of content from some true industry legends. We've got John Murphy up here. But we've got guys like Martin Pring, David Keller, Arthur Hill, people that have been doing this for a long time, have really been kind of figures of the industry for a long time. So our articles page, if you come to stockcharts.com, you click articles right up at the top. Tons and tons of content here for you. It's all free to read, so come check it out. There's a lot of educational material in there. You can learn from guys like Martin Pring and John Murphy and David. They all do real educational stuff. They're trying to really teach people through their articles. So it's pretty amazing what they do. But the other thing that we've leaned really heavily into this year is Stock Charts TV. So we're actually doing a lot of video content. I might get an ad playing here in a sec, but a lot of video
I know,
content.
Michelle, how do you broadcast it? Do you do live stream or?
Yeah, so it's all, I don't want to get the infinite loop of death here, but it's all live streamed. We're doing content through Stock Charts TV via a platform called Livestream.
Okay, I know it.
It's streaming 24/7. So we always have content, but then we also put everything up on YouTube. So we've got a thriving YouTube channel there. You can go find Stock Charts on YouTube. So it's tons and tons of content to watch, tons to read, and lots to explore. The big thing actually that I didn't get to demo today, but is something called ACP. This is our new interactive charting platform that we just released this year. So we're doing lots of big things. This is a very sort of dynamic new tool for us. Some pretty amazing charting features and sidebar views. There's all these market panels that you can pull out.
Nice.
So lots of amazing things to play with there.
Well, everyone, especially if you're a stock trader, there's not a lot of coverage on currencies or FX, but if you're a stock trader, great resource.
Yeah.
And you could also follow Grayson on Twitter at Grayson Rose. And Grayson, I want to thank you for being here. You've become my trading warrior brother, like David and everyone else who survives 20-30 minutes with me.
Exactly.
And I wish you a lot of good fortune going forward and into this fall to winter trading season.
Into the unknown, right?
Yeah, the unknown.
Dale, thank you for having me. Yeah, no, it's a
Grayson.
blast to be here. Yeah.
I appreciate you coming here, edifying and sharing your views with face, buddy.
Thanks, Dale.
Okay. All right, everyone. Grayson Rhodes. We'll see everyone tomorrow for Turnaround Tuesday. We'll see what happens. Kind of comatose today. And we'll, we're headed towards the finish line. Thanks again, Grayson. And remember, everyone, don't just count your pips, your gains, whatever you count materially in these times. Count your blessings, and we'll see everyone tomorrow. Adios. You're very welcome, guys.